International Royalty Corporation did an IPO on the Toronto Exchange in 2005, and I know it was coincidental at the same time as the IPO that you acquired the Voisey's Bay royalty, which at the time was the most expensive mineral royalty ever purchased. So can you describe how that all came about?
Yeah, prior to us spending $160 million to buy one royalty, the largest mineral royalty was when Franco had bought the royalty on Stillwater, the Stillwater mine. They paid, I think it was $36 million. So we were going way out of the box on this. And what happened was we had heard that Altius Minerals had bought a 10% interest in the Voisey's Bay nickel royalty, which is in Newfoundland, from the two prospectors who discovered Voisey's Bay. And we also knew we were dealing with people from Newfoundland, which Newfoundland has a very unique culture. Wonderful people, and I always enjoyed my trips to St. John. But they're very inward looking. They're not. I don't want to say parochial. That's not correct. But it's a tight community up there. So if you're from the outside, they're suspicious of you, and if you're from New Jersey, they're even more suspicious. So what happened was we knew that the other 90% might be available, but we also knew we were going into a different culture from big corporate business. So I called up Chris Verbisky, who was leading the effort on this royalty, and asked him what his favorite sport was, his hobby. Turned out it was fly fishing, which, a man of kindred spirits. Yeah. And so Doug Hurst and I flew up, and we met with Chris and his CFO, Chris Daly, and the three of us went to a fishing lodge for 3 days to get to know each other and to discuss stuff. And at the end of the third day, we were in a horrible rainstorm. I mean, it was miserable, and Chris Verbisky and I were in the same boat, so we went in early to warm up. And we sat down, and he said, let's talk about the royalty. And he showed us his model. And his model, he had spent a lot of money and a lot of time. He had a former technical service guy from BHP develop it. It was a marvelous model. And we had done our own back-of-the-envelope model, which wasn't anywhere as complicated. But our value was within 5 or 10% of his. So I accepted his value right out front. And that started developing trust. And then over the next year, Chris would ask us questions. We would develop white papers for him on it. And after a year, he finally offered to sell it to us. And then we used the IPO to pay for it. And that's why we had collected the other portfolios from the other companies. We had them all waiting in the shelf, and we went public with something like 65 royalties. But Voisey's Bay was the flagship.
It was a huge, highly complex effort to do that, IPO and the oil royalties at the same time. Tell us a little bit about this IPO exercise, how it took place, because I haven't been a witness to this. I know that it was quite an experience.
Oh, yeah. It was a nightmare. First of all, we were doing equity and debt. And for those of you who haven't worked with debt, debt is about paperwork. There's mountains and mountains of paperwork. And it's all led by lawyers who enjoy mountains and mountains of paperwork because then they can keep, running the clock on you. So the problem we had is that we had to close in 3 different cities on the same day. We were in Vancouver, where George Young took closing the BHP portfolio. I was in Toronto, which was because we were listing on Toronto and my law firm was in Toronto. I was heading up not only the equity, but also getting the debt put to bed. And then Doug Hurst flew to St. John's to close on Voisey's Bay. And obviously, none of this would have happened unless Voisey's Bay closed first. And so none of us slept for like 3 days before. We had something like 40 lawyers working on this, and we were exhausted.
The IPO for International Royalty Company was in February of 2005.
Correct.
And so running a public company is quite different from running a private company. What are the pluses and minuses?
The major plus is that you can raise money easily. And if you're public and you do a good job, your share price should go up and you can earn a lot of money. The negative is that as CEO, you're working 80 to 100 hours a week, including holidays and vacations, trying to get it done. You have to meet a lot of investors. Paul Zink, who was our president, Paul and I would meet over 100 institutional investors a year. So one of us was always on the road. As you know, I would do 100 days on the road. And you'd have these meetings with investors, and most of the time, if they didn't know your company, they would listen. And if they did know your company, they were critical. And you would go to these meetings, and they would just continually test your competence or declare you're incompetent, or why don't you sell to somebody else tomorrow? And they really didn't understand that the relationship between the CEO and the investor is my job is to create value, and their job is to recognize it. And when our stock collapsed in the downturn, I was furious that I was working 100-hour weeks, doing the best I could, and that my stock is getting hammered. And it played a major role in why I decided to sell. I just got so beaten down by investors always questioning your competence and being so critical of all of your efforts to create value.
On the acquisition side, did you base a lot of the royalty targets that IRC went after off of the databases that you developed over the years?
Yeah, initially we did, but our business model was quite different. You know, prior to international royalty, the royalty companies were all heavily focused on precious metals. And we had this interesting economic concept that $1 of cash flow was worth $1 of cash flow. We found out in hindsight it's not. A $1 of gold cash flow is somehow better than $1 of nickel cash flow. But at the time, this was our business model, is that these guys were all chasing gold and silver and platinum, palladium. And we were out buying base metals, so we had no competition. So Doug and I started with our databases, which were quite exhaustive. I mean, we pretty much knew all the royalties in the world. And then as we did more deals and people found out about us, they would bring us deals. And then, of course, as we grew the company, then the investment bankers would bring us deals. The most interesting part was because our databases were so comprehensive, we would see that a major mining company would have, 20, 30 royalties. And we would contact them and say, hey, you've got these 20 royalties, we'd like to buy it. They'd say, no, we don't. Yes, you do. No, you don't. Yes, you do. We'd send them the list, and then about 2 weeks later, 3 weeks later, we'd hear from them saying, oh, we didn't know we had those royalties, because so many of them were tied to expiration agreements and then were just tucked away in a drawer. In fact, in one case, it was. And so, of course, their land departments hated us because we were showing they weren't following their assets. But a really good example was the Penasquito royalty. Penasquito is a mine in Mexico, and we found out that Rio Tinto had this royalty. And we contacted them to say we wanted to buy it, and went, yes, no, yes, no, yes, no. They came back and said, yeah, we did. And it turned out it was in a contract in the drawer of an exploration geologist that had just left the company. So they said, well, Rio Tinto policies, we need to put it up for sale to a proper auction. And, bids have to be in by 5 o'clock on Friday. We sent our bid in on Friday morning for $80 million for this royalty. And they called us saying, wow, this is amazing offer. We've got to wait till 5. And Royal came in at like $459 with $100 million for a royalty that Rio Tinto technically didn't know they had. So one of the contributions we made to the royalty industry is all the major mining companies then started checking their records to see what they had. But this happened to us multiple times, not just with Rio, but with other companies where they didn't actually know the royalties they had. So when we went in and showed them, it gave us an introduction. They appreciated the fact that we were willing to pay for assets they didn't necessarily know they had. And for a couple of years, we were just sweeping the market because we had no competitors. It was marvelous.
I think that also happened with Oyu Tolgoi, didn't it?
Oyu Tolgoi? Yeah, we tried to buy the royalty on Oyu Tolgoi from BHP, and we put in an offer, and Chip Goodyear said, yeah. And but Bob Friedland had a first right of refusal, which he had to execute about, I think it took him 3 or 4 microseconds later to execute. And it was really interesting because we were sad we lost it because, here's one of the world's best and biggest copper deposits. So when we went on the IPO, we would tell this story about how we lost it to show investors we had really good networks. They all assumed it was Franco-Nevada that had put in the offer. And we actually got points with investors for something we lost, which was really odd. But I've been on that mine site when they were constructing that mine. It's truly one of the world's biggest. It's huge.
So International Royalty Company is that took off and started running. Did you have a big staff then? No.
Our maximum staff was 11 people. And this is one of the wonderful aspects about royalty businesses. They're exceptionally scalable. When you buy a royalty, because you're not operating the mine, you have to monitor it, but the rest of it is just clipping coupons. So you can get by with having a fairly small staff. And we had 11, of which I think 6 or 7 were the business development guys. And then we had a couple in accounting and 1 or 2 other people. And if you look at Franco-Nevada right now, which is the world's largest, I think their market cap is 35 billion or something, and they have like 20 employees. It's the most scalable business of any industry in the world, which means more of your profits are going to the bottom line rather than going to corporate overhead. It's an absolutely marvelous business model.
I think Warren Buffett agrees with you on that.
Yes, he does.
You've talked just a little bit about the gold royalty companies, ones that are focused on precious metals versus anything else. Is there any other aspects of that you might want to comment on?
Well, I think it's important to see how the business has changed. When we were getting ready to sell IRC in 2010, the business had really changed from buying royalties to buying streams. And as you remember, we had that famous board meeting where I presented 8 mega deals that we wanted to do that we needed in order to continue being one of the largest royalty companies. In the end, we were unable to get any of them. And it wasn't because we necessarily lost out to a competitor. A lot of those deals were pulled from the market and other reasons that they weren't appropriate. So for us, it was a time to sell. However, since then, if you look at the industry today, there's about 40 royalty companies. And so the question is, the new royalty companies, how are they differentiating themselves from the investor's perspective? And what we're seeing is they're becoming very commodity focused. Like there's Uranium Royalty Corp now, which only does uranium royalties. We see several of these being battery metals, where they're chasing nickel, vanadium, copper, the battery metals. So the ground that we broke with IRC, where you could invest beyond precious metals, particularly in this market, because the 3 biggest companies, the 4 biggest royalty companies, have such a monopoly on the precious metals royalties. We're now seeing people differentiate. And there's about 40 royalty companies right now, and they're chasing all different manners of minerals and metals and everything else.
So there's really kind of 2 sides to a royalty company. One is acquiring existing royalties, and the other is financing operating companies or projects through creation of a royalty.
Right.
Would you say that most of the, say, 40 royalty companies out there, which way do they lean, or is there a combination?
Pretty much everybody is running a combination right now, but I have to preface that all of the major royalties in the world, the largest royalties in the world, are pretty much owned by one of the large royalty companies right now. That wasn't true when we set up IRC. So there's not a lot of large royalty product available anymore. Now, there's still thousands of small royalties, and if you're going to differentiate yourself, say, like with uranium royalties, yeah, they're the only group chasing uranium royalties, so they can have them all, right? For everybody else, the smaller royalty companies that are staying in precious metals, a lot of them are having to do royalty or stream creations. And as I mentioned, the switch over to streams has grown. And the reason is quite simple. if you look at a large royalty company that has 400 or 500 million a year in revenue, the institutional investors expect them to grow at least 10% a year. So that'd be, say, 40 million. You can't buy a royalty, an NSR royalty that has 40 million a year. You have to go with streams, and streams cost hundreds of millions, if not billions of dollars, but in return you get, 40, 50, 60 million a year out of it. So for the big companies, they don't really have a choice. They still buy stuff that they like that's smaller, but for them to incrementally grow their revenues, they've got to do streams. And for the smaller precious metal companies, they have to kind of find situations that require financing and convince the owner to sell them a stream or a royalty rather than do equity. And so you have multiple factors depending on which part of the space you're in. And that's playing a huge role in today's market.
I recall somewhat now, almost 20 years ago, that your discussion, your concept that a successful royalty company has to start off in their early years with a flagship royalty. Do you think that obviously with IRC, Voisey's Bay, or with Royal at Cortez, you think that kind of fundamental building block is still important today?
Absolutely. It's critical. And it's for several reasons. One is your flagship better be a world-class deposit. And if it is, now the investors will credit you with having a royalty on a world-class deposit. The second is if it's a flagship, it means it's a big one, which means it's giving you big revenues. And I think one of the challenges for the micro royalties, the small guys, is they have no revenues, or the revenues they have don't even cover their working capital. So you're of no interest to investors if you don't have your working capital. The third is it sets the theme for what you're going to do going forward. When we bought the royalty on Voisey's Bay, it pretty much established we weren't a precious metal royalty company. And although we did buy precious metals when we could, because we got the message that $1 of gold cash flow is more important than $1 of nickel. Once you buy your flagship, it pretty much sets the tone for what part of the royalty sector you're representing. So those are the reasons why having a flagship is really important.
We went through a downturn with kind of along with everybody else in the commodity sector. And then the share price did come back. We've added had some additional capital raising that we did, and then we ended up around the 2009, 2010. The sale of the company occurred. Can you give us talk about the background for the sale and kind of how it evolved and some of the motivation? And I won't coach you here.
Yeah. I remember Dave was my strategic planner saying, sell, sell, sell. But you did that from like the day after we went public, The story behind this sale was really quite interesting. It was my objective to build $1 billion company. Why? Why not? Not a lot of people get a chance to do that. It sounded like a fun target, nice round number. We were on our way. When our stock got hammered in the downturn, I got approached by Franco-Nevada and by Royal Gold. And Franco said, Doug, we know your company inside and out. We'd like to buy it. We'll never make you an offer unless you're in the mood to sell, because, Dave Harkwell's a real gentleman. He goes, however, we have two issues that we don't understand and that we would need to study. So could we sign a limited NDA and look at these two issues? And I thought, yeah, why not? About a week later, Tony Jensen from Royal Gold called me. He says, Doug, I'd really like to buy your company, but we have these two issues that we need additional information on. Would it be possible for us to sign a limited NDA and look at these two issues? At the same time, although we own the Voisey's Bay royalty and it was our flagship, as I said, we couldn't make the leap in buying another flagship. We're having real trouble with that. The second is President Obama had threatened to raise the inheritance tax. And when I ran the numbers, I was basically working for free. And if he had passed that inheritance tax, and Mr. Biden's making the same noise now, there was absolutely no reason for me to be working 100-hour weeks. And then, as I said, the third was I was getting worn out by investors who were continually complaining, and I just got tired of their negativity. You know, I try to live a life of positivity and always try to be upbeat and do stuff, and they were just beating me down. So when Franco and Royal came in so close with the same request, it was a sign to me it was time to sell. So, and I was also wondering if the super cycle was getting a bit mature. You know, we may have peaked. In hindsight, our timing on selling was perfect, but for you young people, never plan anything on market timing. You'll always get it wrong. So that was the reason we put it up for sale. And we negotiated with both companies. Again, if you're ever selling an asset, you want to have at least 2 bidders so you can get deal tension. And at the end of the day, Royal made us the best offer, and we ended up selling it to them for Canadian $745 million, which was a 70% premium to where we started after the downturn. So the investors were very happy with me, and many of them who had been complaining called to say, "Let me know what you're doing next." Just go figure.
Go figure. So that closed one chapter on your life. What's the next one? Was post-IRC. Tell us about your first couple years after that, and then what that eventually led to.
We sold IRC on the 5th anniversary, to the day, the 5th anniversary of when we formed the company. And I did the appropriate thing is I took a year off to work on my fishing and skiing. And I had a horrible realization that my friends who were still working couldn't go fishing or skiing on Tuesdays. And my social life has always been in the mining industry. And so to be relevant, you need to do something. Meanwhile, because of our success with IRC, I was approached by many of the private equity firms to join them. And most of them had the following pitch: Doug, put 50% of your net worth into our firm, and we'll give you 5% of the returns. Or I can go fishing. And then Oscar Lewnowski, who at that time we were part of Red Kite. Oscar is one of the founders of Red Kite. Oscar approached me with an entirely different idea. He said, if you look at royalties and streams and offtake agreements, it's really a continuum. And he was spot on. I mean, streams are more like an offtake than a royalty. And he said, I am an expert on offtakes. We're building this fund to put up money to build mines. And we want to fill out the continuum. You're an expert on royalties and streams. How about joining us? And it was very, very appealing because he was right. And because nobody else was thinking that way, again, we had an inside track on having a major competitive advantage. So I joined Red Kite, and then Red Kite was originally a hedge fund. And their private equity fund was designed as a hedge fund, which really didn't work for us. Oscar and I went out and raised about $1 billion and created another fund. And then after a couple of years, we realized that we're conflicting with the hedge boys because to them, to us in the PE world, building mines long-term was, 4 or 5 years, where a hedge fund long-term is lunch. And so we ended up separating the companies in 2013, and we spun off Orion, and then we built Orion into what it is today, which is the largest private equity fund in mining.
So what's some of your takeaways from being in the world of private equity versus the public sector?
Well, first of all, working in private, the world of private money is marvelous. When we were public at IRC, we had something like 15,000 investors, where, we're raising $1 billion in Orion and we had maybe 30. The other world, in the public market world, the IR person's job is to open doors and set up meetings, but they want to meet with the CEO or the president of the company. Where in the private equity world, they have such large pools of money, they don't have time to deal with you. So they prefer to deal with the IR guy. And if they have a question, they'll feed it to the IR guy who'll go to the president or the CEO or the CIO, and he'll feed back the answers. It's quite a different structure. Another thing, being private, you're a lot stealthier. So you can run around and nobody knows what you're doing, where for instance, when we were buying one royalty in Chile, I knew that Tony Jensen from Royal Gold was our counter bidder, and we both live in Denver, I had to make sure when we flew down for the big meeting that I wasn't on his plane. I had to fly out of my way to make sure I wasn't on his plane, where in the private world, nobody knows what you're doing. So you can move a lot quicker. It's much stealthier. The other thing is about the investors. The investors are large pension funds and high wealth individuals, universities, endowments, things like that. And, think about it. They're entrusting you with pensioners' money. You have a huge moral obligation not to speculate with that money. So when you do your due diligence, you need to be a lot more serious about how deep you go and how thorough you are, and make sure that you're absolutely minimizing the risk, because this is pensioners' money. It's not speculative, roll the dice money like you can get in the public equity markets. So you need to be a lot more serious about how you treat the money that's been given to you.
We'll come back to talking about what you're doing post Orion, which you retired from, I believe, in 2020.
Yes, in December.
So 2018, you were inducted to the National Mining Hall of Fame. That is one of the big honors for anybody in the minerals sector. How do you feel about that?
Well, yes, it is a huge honor. And you tell me, Dave, you're the one who sponsored me. I guess they didn't have a big candidate pool that year.
Yeah, it was a little thin. Over the course of the career, you've won many other awards from industry and academia. It's a hard thing to do.
Early in my career, and maybe because when I started in this business, the Vancouver Stock Exchange was known as the scam capital of the world, and miners have been known occasionally to exaggerate the truth. I decided that in my career, I wanted to be judged on what I accomplished and not on what I promoted. I've always been very humbled that I get any award. But if you're in the business for 40 years, you really had to have done at least one thing right and get recognition for it. I've just been fortunate that I've had more than one success, and I appreciate the awards.
So now let's talk a little bit about your extracurricular activities. I'm sure a lot of people don't know that you spent a decade studying freshwater shrimp and are considered as probably the top expert on the ecosystem of the Dillon Reservoir in Colorado. Is this got any connection to mining?
Well, I think I can make the bridge because, humans can rationalize anything. But my first love has always been aqueous ecosystems. As a child, I played in the ocean. I'm passionate about fishing, and I wish Jacques Cousteau had adopted me. However, it didn't happen. So when I sold IRC in 2010, I wanted to go back to my roots and study Dillon Reservoir, where I have a ski condo looking out on the water. So I wanted to get into the Colorado Department of Wildlife's records on Dillon, and I knew the only way I could do it was to offer to sponsor projects. And so I contacted them, and by the way, never reach out to anybody with an email saying, I'd like to give you money. Apparently, it's been done before. And it took about 6 emails before they said, well, Colorado State University's Fishery Science Department does all of our research, so here's their number. And apparently, in the world of fishery science, you should not reach out with an email to offer to give them money. I finally got them to meet me, and I sat down. And so what happened is this wonderful relationship with Dr. Brett Johnson at Colorado State University, where I sponsored grad students. But I did it differently from how most people do sponsorships. I said, here's the deal. I will pay for their graduate degree, but I get to do the research with them. So we tried to find a small project to start with to see if we all got along. They wanted to make sure the check would actually clear. And so we started studying the freshwater shrimp in Dillon Reservoir, which are an invasive species and fascinating story unto itself. And that led into me sponsoring 4 or 5 graduate students over a decade. The Colorado Parks and Wildlife was wonderful, letting us get access to lakes you can't take boats on. I've sampled over 70 waters in Colorado, And on all these waters, not only we're doing hard science, but we're also fishing, which is, part of the deal here. The other thing that was really interesting is that because fish live underwater, it's very hard to quantify them. In mining, you can go out and break a rock and send it in for an assay. You know exactly where that sample was. You can't do that with fish. So there's an entire world of indirect statistics that I got to learn about. And it's absolutely fascinating how accurate they are and how they use them. So the connection to mining is mining allowed me to go back and be a fishery scientist.
Well, I also know that you were just not a sponsor, but you were actually a laborer in this.
Yes, I would spend my summers on the research boat. It was funny because when Orion hired me, they said, Doug, we're really honored you're going to join us. You'll be the oldest member of our team. And I said, yes, I want you to think of me as a teacher. I want my summers off. And they said, you're kidding. I said, no, watch me. So I would be on the CSU research boat and having 20-year-olds push me around for 10 to 12 hours a day. And in return for all my hard work, they allowed me to measure and classify 118,000 shrimp. Each one is the size of your pinky nail.
Well, it keeps you off the streets, I guess, for a while. Even beyond your support of the programs at Colorado State University, I know you are heavily invested in education, many, many forms. Why is this so important to you?
Well, it goes back to what I was saying before. I was raised in New Jersey. There's not a lot of mining in New Jersey. So when I went to grad school, I had a really hard time getting my first job. And this sent me on a path that I wanted to make sure other students didn't have to go through the same scenario. And right now in my career, because of what I've done, I have the unique ability to access very senior people in the international mining industry. So I would go down and give lectures at the University of Arizona and at Colorado School of Mines. And if I see a real star, I would call up a CEO and said, here's somebody you seriously want to hire, and see if I could open a door to get them a job. I also like to do my own research, as you're well aware, given the number of times I've given you assignments on my behalf. And the problem with doing research is that there's no point in doing it if you can't share it. And so, as you know, I like giving public speeches, and I would lecture at these universities with some specialized research I was doing as an outlet for doing this research.
Some viewers may not know about the extent of your support and involvement with the University of Arizona. Could you outline for us just some of the duties you've had with the department down there, the Lowell Institute, the School of Engineering?
So Dr. Mary Polton, I ran into her at an SME conference, and she's standing behind the University of Arizona booth, and I said, "Oh, how are things going?" And she goes, "Doug, we don't have enough money to pay for light bulbs." And I thought, what? She was dead serious. And she was trying to rebuild the mining engineering department. So what I did was I gave her a bunch of my founder shares from IRC to fund light bulbs and paper for the copier and things like that. And then I started working with Mary on rebuilding the department. And one thing about Mary is she has wonderful access to mining people, and she put a crackerjack team of people together as her advisory board for the department. And that eventually led to creating what's now known as the Lowell Institute, where I was one of the founding members, along with a lot of other well-known people in the mining business. And then eventually I became chairman of that. In addition, in order to be heard in the College of Engineering, because mining was such a small part, she wanted somebody loud and opinionated.
You got the right one.
Yeah, so I was nominated, and I spent about 10 or 11 years on the advisory board for the College of Engineering, and then I switched over to the College of Science, and I was there for 3 or 4 years. I think in total I was on the advisory boards there for about 15 years, as well as working on the Lowell Institute and other initiatives, and doing, as you know, because you did this with me, we put on online courses, we put on short courses, we did all sorts of things. I was going to Tucson about 6 or 7 times a year during that interim. And then I stepped down a couple of years ago And now that Steve Enders is head of the mining department at CSM, he was one of my compatriots at Arizona, and he now has me on his executive committee doing similar type stuff at the Colorado School of Mines.
Well, you certainly have made a lot of contributions, both financially and enormously in the time that you've devoted to mineral education. I don't think we can leave the discussion about talking a little bit about your love of fly fishing. So where did that all come about?
Well, I mean, I really wanted to be an oceanographer because of my summers in Montauk, Long Island, and following Jacques Cousteau. I was never any good at group sports. I mean, you do not want to watch me swing a baseball bat. It's embarrassing and humiliating. I can't hit a ball to save my life. So I was destined to take up an individual sport rather than a group sport. Because I liked fishing, it was a natural place for me to go. And fly fishing, I did it when I was a child, but not very actively. But I picked it up about 6 or 7 years ago, and now it's pretty much the only form of fishing I do.
And I know that you take some very interesting fly fishing trips all the way around the world.
Well, it's funny because retired people often say they like to travel. Well, I've spent my whole life traveling. And a lot of times when people are retired, I want to go to England and look at the cathedrals and the castles and all that. When I did that as a junior in college, we said ABC, another bloody castle or another bloody cathedral. My interest is in fly fishing around the world for exotic species that National Geographic doesn't cover. And in mining, of course, I had that privilege of traveling to places National Geographic doesn't know about. But yes, I've been to Mongolia, I've been to Bhutan, I've been to Chile, I've been all over the world. And in my golden years, or my silver years, I intend to do a lot more fly fishing on some really, really exotic trips.
I'm envious. Throughout your career in the minerals industry and all the things that you've been involved with, what are your biggest career regrets?
My biggest regret is that I never worked in a mine. In the final days of Anaconda, they had scheduled me to go to the Car Fork mine, which is next to Bingham Canyon in Utah, to do a 2-year stint and learn mining. And then they canceled it. Instead, they laid us all off. So I never have actually worked in a mine. I think you learn a lot as a geologist. You learn a lot more about the connection between the geology that you're studying and the cost to get the rock out of the ground. You also learn a lot more about the nuances of how mines operate. I mean, you can sit in classes and learn the basics, but when you actually work in a mine, you get untold experience and things they don't teach in the class. And although I've spent my life valuing mines and financing mines and all that, I still, in the back of my mind, I always regret that I didn't do that. The other thing I wish I had gotten somewhere along the line was an MBA, because all of my business training has been on the job. And although it's been a wonderful education, I still wonder what I'm missing in my background that I could have gotten if I'd taken an organized MBA course.
You've been a very active supporter of SME, member for many, many years. I'm going to give you some statistics. I know these because I had to compile these once. You're the only person to give more than one keynote at the SME annual meeting. You have given 3. You have published 60 articles, given 15 speeches, been a moderator of a keynote session at least 3 times, been a session chair 4 times, and created SME's first online video. You received 5 SME awards, including the Distinguished Member Award. And today you're still writing an article for Mining Engineering magazine. Why do you support SME so much?
So SME and AIME are wonderful organizations. I first got involved in 1992, that long ago. I had to look it up also, by the way. In my early days, when I was trying to create my consulting practices, these professional societies really help you build a business network. And I don't think the young people appreciate that so much. But that's what the societies are for. They're for bringing people together. And when you're young and you don't know anybody, this is a wonderful place to meet people. And if you give speeches to an audience, and particularly if you give a good speech, there will be follow-up. They will contact you. As I got better known and I kind of moved up the food chain and eventually ended up doing keynotes, I got even more exposure, and I got exposure at a higher level. I remember in my early days, if I went to SME and gave a good speech, I could draw $20,000, $50,000 of work out of it, which was a lot of money compared to what your SME dues were. So exceptionally cost effective to do this. It's also fun. It kept me in business and opened the door to new opportunities. And as I say, it's got to be the easiest way to build a business network, is joining these societies. And SME has been very good to me, whether they've given me awards or given me opportunities to speak. But it's been very symbiotic.
So here we are in the latter part of 2021 when this interview is being conducted. You have retired from Orion. Where are you at now, and other than fly fishing? What do you see ahead?
Well, in heart of hearts, I'm a research scientist. I'm currently building a fly fishing app, which we hope to launch this year, or flip. I'm chairman of Chicana Copper Corporation. I wanted to go back to my geology roots, and they have the most fascinating breccia pipes in Peru with phenomenal intercepts on high copper. I'm a director of Metallo Royalties and Streaming. I wanted to stay in the royalty business because I have an expertise on that. And then I'm an advisor to several other companies that have some very intellectually challenging problems that I'm hoping to work them through. I do plan to take at least 2 exotic fly fishing trips, and I'm writing a book on the modern mineral royalty industry, which is going to be published through SME. Some challenge me to ever using the word retirement. It's really more of a state of mind than it is something you do concrete. The days when our parents retired and they gave them the gold watch and put them in a rocking chair are long gone. So I have high energy levels, and if I can still give back, why not? But I am spending progressively more time in the fishing area than I am in the mining area. But I'm still active in both because, as I said, my social life's in mining. I got to keep up with my friends.
Your career has taken you a number of different paths, starting out as a zoologist and a geologist. And along the way, you've had many fascinating experiences. But it's all involved a lot of change. You had comments about change in a person's professional career, or any career?
Yes, change is good. There's a lot of people who are terrified about change. And the best way to learn about change is get laid off because you have no choice. And like I said, you get up the next morning and you've got to change. I like change. When I see something that's more interesting than what I'm doing, I want to do it. And there's nothing in this world you can't learn. I think there's a misperception that when you go to college, you learn everything you need for the rest of your career. And that's really not true. College and grad school are about teaching you how to think, how to problem solve. But you'll use those skills through the rest of your life. So if, I changed from geologist to investor relations, and I had no investor relations courses in college or grad school, but it's not that hard to learn. There's very few professions that you can't learn in a matter of months. And so I embrace change, and about every 5 or 10 years of my career, I would make one of these radical changes. But it was always more interesting, and in my case, it was more lucrative.
Well, along the same course, if you're talking to new people, young people coming into the minerals industry, what career guidance would you give them?
Well, I think to me, I had to ponder this question for quite a bit. And although I may have worked in different sectors of the mining industry, I've never worked outside of the mining industry. I happen to think it's the most exciting business in the world. I mean, anytime you get to be out in nature, mess around with nature, play out in nature, I mean, how can you not be fun? We get to go to places that people don't even know about. That's really cool. I mean, I've been 9,000 feet below the surface in the gold mines in South Africa. I've been 14,000 feet building a gold mine in Chile. I've been north of the Arctic Circle a half dozen times for fishing and mining. We get to go to really cool places. But I think more important is that in doing that, you also get to interact with different cultures. You learn more about the world and you learn more about you. We're truly an international business. So if you're parochial, stay in the U.S. or wherever you live. But if you want to really understand this planet, traveling to different cultures is really key. I think the other thing is that mining gets a bad rap. We truly create value for society. I hear all this talk these days about electric vehicles and all that. We're going to have a green economy. Yeah, and you know what's going to fund that green economy? Our metals. So, yeah, you can think mining is bad and green economy is good, but you don't get that. You don't get the green economy without us. So we have a bad reputation, some of it notably earned, particularly in the early days in the 1800s. But this business has advanced so much, and we're so sophisticated now with respect to technology, with respect to stakeholders' issues, respect to responsibility and disturbance in land, that I think that the next generation can take us over the top on this and get mining back to being a respected industry in the world.
Well, thank you, Doug, and I'm thanking you on behalf of AIME for your time in sitting down to talk about your career. You've had an incredible career, and I know it's still far from over, and I'm sure that viewers of this interview will be fascinated, and if they don't already know about your contributions to the business, hopefully they will know now. So all the best for the years ahead.
Thanks, Dave. Where do I send the check?